But we're going to talk now a little bit more about the trading week in Europe. I am joined by Stephen Pope. He's Chief Global Market Strategist at Cantor Fitzgerald. Nice to see you again, Stephen. We are down a little bit for the day, but overall there still seems to be a lot of euphoria going around in terms of stocks. We hit 10,000 on the Dow this week. Year highs for European markets, gold, oil, all rising higher. Bit of exuberance, irrational perhaps?
Now, I think that if you take the equities, we look at that sector first, we've been supported by some pretty healthy economic numbers, and then the earnings coming through in the majority of the European companies have been to the good side, and we get into the real meat of the European season next week. I think you take the signals coming from the US, that's been a good signal. Sure, taking back some money today, disappointing with GE and Bank of America, but overall the early signals out of this earnings season are encouraging and keep pushing equities to better levels.
So anyone sitting on their cash, obviously anyone who has been doing that is clearly feeling a bit regretful, but a bit of a mug's game to stick with your cash for now?
Well, I think that people will turn around and wonder what is the correct place they should be putting any cash they're still holding when you've moved so far so quickly. It's a question of saying that we are actually going to continue moving higher during the course of 2010. So I think the cash does have to be put to work. There's not much yield around on the government bonds. And so I suppose equity would probably be my sector of choice.
OK, now we have had, as we've been discussing, quite a bit of M&A news out. We had yesterday Xstrata walking away from its proposed tie-up with Anglo American. Today we've got CVC pulling out of its proposed acquisition of National Express. Do you get a sense that this is something we're going to be seeing a lot more deals taking place?
I think we're in a position where deals will take place because I think we're ripe for further consolidation. Many costs have been cut. Companies have been running on pretty lean sort of figures now. And I think also in private equity, there's quite a lot of money around that wants to go and find a home that can be put to work and sort of squeeze some of these issues for the maximum. Perhaps in terms of the National Express, it ran away a little bit too quickly and they're thinking about the longer trends, etc. You've got big fare increases coming through. How's that going to affect into the broader country? So maybe it's just time to walk away and rethink that situation. I think in terms of the mining story, the way the commodity prices have moved up, it's really allowing a player like Xstrata to sort of maximise its own mineral base to the full effect, then perhaps build up their own cash reserve and come back later to look at Anglo American rather than doing it right now.
OK. And I'm afraid we're going to have to leave it there, though. Stephen Pope from Cantor Fitzgerald, thanks so much